get Vir Advani right here live on the show. Good morning. So we've seen that 35% increase in the bottom line. But what we've also seen is a contraction in the margins. So I'm going to begin first with the report card before we get into the final details. It's a quarter where we saw inflation being high, input cost pressures also being there. How did you navigate through that? And going forward, how will you improve margins?
Great. Thank you so much for having me today. It was actually a strong quarter. I think you saw revenue grow about 27%. And like you said, the bottom line also grew well. Of course, gross margins have been under pressure, and that has been the case for the last 2 quarters. We've been the way we've handled it, and I think that's evident from the numbers, is that we've been driving volume growth, absolute volume growth, and therefore quantum of profit has been the focus with a minimum margin that we are accepting internally. We had originally thought that we would be able to see improvement in gross margins in the second half because of the cooling off of commodities. But of course, you're aware that the dollar has, in the meanwhile, strengthened dramatically. And therefore, almost all the benefits of cooling off of commodities have been taken away by the dollar. Now, it's our understanding that the dollar will ease off a little. I don't think it's going to be this strong. So we should hopefully see some benefits coming in Q4. That's as far as the macro environment is concerned. As far as Bluestar is concerned, you may be aware that we're commissioning a new factory in South India, Sri City, for our room air conditioner business. And you know that we have a number of levers there to improve margins as we go forward. Of course, that production will only come online in January. So Q3, we will continue to see this margin pressure. But as I mentioned, we'll drive further volume growth to take care of the profitability.
You're expecting the real improvement to only kick in from January onwards in the fourth quarter. But Mr. Advani, in the conference call, what the top management has also said is that prices for the unitary product segment would be reviewed in August. What we would love to get a sense from you is, even though you're expecting the macros to only improve in January, will there be more price hikes till then?
So, yeah, we've said that we will review prices. I don't know if we're going to be increasing prices right now. This is anyway a lean season, as you know. Q3 is usually low and small for the unitary products business. So I don't think we're in a position right now to increase prices. As I mentioned, as we get into December, January, when we are looking at the summer, we will review how our Sri City cost structure is coming out versus market operating prices, and we'll take a call then. So I don't see any price changes for the next 2 to 3 months.
As we look into the future, could you broadly tell us that how much of non-unitary business, which in a sense is the industrial business, you have visibility for? Because we are talking about capex, we are talking about corporate spending a lot in terms of creating capacity. And considering how quality constraints and temperature management issues are there, are you getting a sense that a new capex cycle has started, where you would be benefited disproportionately?
Yeah, so absolutely. So I'm glad you asked the question. Our segment one, which is largely our B2B business, which addresses buildings, of course, but now more and more the infrastructure and industrial markets. You can see order inflow has been very strong. Also, revenue growth has been strong and profitability has held up. Our segment one margins are now at about 6.3, 6.4%, and we're looking to improve them further. So all of this has happened because volume, we're booking more business, and the pace of orders that we're executing also continues to be reasonably good. And this is across the board, right? From a large 200 or 300 crore infrastructure project, all the way down to a light commercial shop, showroom, boutique type of requirement for central air conditioning. So we are definitely in the middle of a capex cycle, a significant one. Probably the highlights, as we've told you that, we look less and less at commercial buildings as an opportunity, and we look at the infra market. And within infra, of course, there's our traditional metros and all of that, but also there's this growing data center business that we're very bullish on. As you may know, data centers consume a huge amount of electrical and mechanical services. And so that's a big growth opportunity for us. And again, in tier 3, tier 4, tier 5 markets where we're seeing central air conditioning becoming a standard feature in most retail or QSR or other platforms like that. So I think overall, we're extremely excited about the B2B opportunities, and we have good visibility in terms of an order book for the next 12 to 18 months. And we're not seeing any slowdown in inquiries or order inflow even in this quarter. So I think that's a bright spot for Bluestar.
With one final thought, Bluestar has always been in the unitary and the B2B cooling solution business. You've not diversified. If I look at some of your peers, they've really diversified, and they've diversified their revenue lines consciously. Are you thinking on those lines?
So we are going to stay focused as a HVAC&R company. So that's heating, ventilation, air conditioning, and refrigeration. We're not looking to diversify the portfolio into consumer durables or any other avenue like that. And the reason is that we believe that we're experts in this area. Now, of course, the Indian market is only so large for this, the addressable market is only so large. And therefore, our answer to that is to go outside, to go global and to start exporting. You may be aware that we're already exporting to the Middle East and Africa. By the end of this year, that overall business should reach about $100 million in size. And we've also stated an objective to now start exporting to Europe and the US as well. These are very advanced markets where we believe that we have technology that can be competitive, and it will be a very exciting opportunity for us. So I think the future of Bluestar is a global AC&R company, heating, air conditioning, and refrigeration company. And I think that's the focus for us going forward.
When the unitary air conditioning market, I'm largely referring to the retail market, also had very sizable competition coming from Koreans and other Japanese companies. Looking at the way how PLI schemes have moved, how imports are getting more difficult, supply chain bottlenecks are clearly moving. Do you see Indian companies like a Bluestar and Voltas gaining disproportionate amount of market share, something which I don't think anybody is talking about right now?
Sure. So the PLI scheme, in our opinion, is a great move for our industry. It was not a recognized industry until we were included in that program. We are frankly very happy with the quantum of investment that is coming into the industry, because it builds, when we build this kind of scale as OEMs, and Bluestar is one of them, or Voltas or anyone else you mentioned, and we include the Koreans and the Japanese all in that. I think what happens is that the component ecosystem also gets built. As you know, that all of us are net importers today. A lot of the components still come in from outside the country, and that needs to change. And that will change if we can build the scale and the volume in the domestic market. So we see this as a great opportunity to attract those component suppliers, to bring them into the ecosystem, to bring down the cost, therefore not be so dependent on foreign exchange fluctuations. Of course, we'll always be open to commodity fluctuation, but at least we'll knock off the forex angle of that and truly become backward integrated manufacturers. So as far as Bluestar is concerned, we are happy that we have made these early decisions in capacity. As you know, we've been manufacturing in India for a long time. We're scaling that up now, and therefore for Bluestar, at least we see this as a huge opportunity to grow our market share. We've stated that we want to reach 15% share over the next couple of years.
Great to have you on the show. Thank you